It is now time. We would like to begin fiscal results and business update session by Eisai for Q3 fiscal 2025. Today, the briefing is held in virtual format. Please find presentation materials on Eisai website. I would now like to introduce the presenters today. Mr. Keisuke Naito, Representative Corporate Officer, COO, and Chief Growth Officer. And Mr. Takuya Oyama, CFO and Chief IR Officer. Mr. Oyama, CFO, please.
Hello, everyone. Thank you very much for your participation today. I am Oyama, and I assumed the role of CFO and CIRO this January. Now, let me begin with the highlights of the third quarter of fiscal year 2025. Please turn to slide 2. Revenue for the third quarter of fiscal year 2025 reached 619.9 billion yen, a 3.1% increase year-on-year, driven by steady growth in our organic pharmaceutical business. Operating profit was 54.5 billion yen. While this represents a decrease compared to the same period last year due to the decline of temporary profit from product out-licensing this fiscal year, the contribution to operating profit from our organic business has significantly expanded this year, showing a steady progress. Next, regarding our pipeline, as already announced in the news release, and as we will detail this later, we invested in 2 in-licensing deals that will help maintain and leverage our oncology franchise. We are progressing steadily toward achieving our full-year forecast of 790 billion yen in revenue and 54.5 billion yen in operating profit for fiscal year 2025. Next, I will explain the details of our consolidated results for the third quarter of FY 2025. Driven primarily by strong growth in our core products referred to as 3Ls, the anti-cancer drug Lenvima, the insomnia treatment Dayvigo, and the Alzheimer's disease treatment lecanemab, which resulted in a 7% year-on-year increase of our organic pharmaceutical business, revenue reached 619.9 billion yen, up 3.1% year-on-year. This represents the record high third quarter revenue, and as we consider it highly significant that this growth was achieved almost entirely through organic business expansion. Cost of sales was 139.2 billion yen, with the cost of sales ratio at 22.5%, slightly higher than the same period last year, but they have been controlled within our plan. The increase was due to factors including the decline of one-time gains recognized in the prior fiscal year from product out-licensing, which were not associated with significant cost of sales, the impact of drug price revisions in Japan this fiscal year, and changes in the product mix, such as the decline in sales of Halaven, which has a relatively low cost ratio. As a result, gross profit was 480.7 billion yen, up 1.6% year-on-year. R&D expenses were 114.4 billion yen, a decrease of 8.5% compared to the same period last year. The R&D expenses to revenue ratio was 18.5%, down 2.3 percentage points from the previous year's 20.8%. This decrease was due to the peaking out in trial costs for Leqembi, combined with cost optimization from structural reforms implemented in the U.S. last fiscal year, such as workforce reductions. SG&A expenses increased by 4.7% year-on-year to 315.7 billion yen, reflecting proactive investment resources to Leqembi. As a result, OP was 54.5 billion yen, and the profit for the period was 41.8 billion yen. While both figures decreased year-on-year due to the absence of one-time P&L items, the profit contribution from organic business continues to expand steadily. Regarding the full-year forecast, while progress has been steady through the third quarter, we plan to actively allocate resources in the fourth quarter to next-generation key pipeline programs such as the anti-tau antibody etalanetug and the narcolepsy treatment E2086. Additionally, we anticipate recording structural reform costs in EMEA. On the revenue side, however, due to uncertainties regarding one-time revenues from partnership and out-licensing, we are maintaining our forecast of 790 billion yen in revenue and 54.5 billion yen in operating profit. This slide shows the factors driving the change in revenue from last year. The key point, as indicated by the light blue box, the second from the left, is that the pharmaceutical business saw significant revenue growth driven by the 49.5 billion yen increase from what we call the 3 Ls, Lenvima, Dayvigo, and Leqembi, which offset the 8.4 billion yen revenue decline due to factors like Halaven reaching LOE. Meanwhile, in other businesses, which include sales from non-drug discovery subsidiaries, primarily due to the absence of upfront payment for divestiture of rights for Pariet in China, which occurred in the previous fiscal year, revenue decreased by 22.3 billion yen. As a result, revenue increased by 18.8 billion yen year-on-year to 619.9 billion yen. This slide provides the factors contributing to the change in operating profit. The second item from the left, the contribution of gross profit of 7.8 billion yen, reflects strong growth in 3 Ls, which offset impacts such as a decrease in temporary profit from out-licensing and lower sales of Halaven. R&D expenses and SG&A expenses were explained earlier. Expenses related to Leqembi have largely shifted from R&D expenses to SG&A expenses. The 5.1 billion yen decrease in other income and expenses includes the absence of temporary profit following the end of global strategic collaboration with BMS for MORAb-202, which was recorded in the previous fiscal year. The key point here is that while last year's operating profit included significant one-time gains, including out-licensing income, this year's operating profit is almost entirely comprised of profits derived from organic business. Although detailed figures have not been disclosed, the operating profit contribution from organic business has grown significantly, approximately doubling compared to the same period last year. This slide introduces the 2 in-licensing deals in oncology pipeline announced recently. As a foundation for maintaining and expanding our oncology franchise, the first is the acquisition of exclusive development, registration, and commercialization rights for taletrectinib in Europe, the Middle East, Canada, Asia, and Oceania from Nuvation Bio in the US. The second is the acquisition of exclusive commercialization rights for serplulimab in Japan from Henlius Biotech in China. Taletrectinib is a next-generation oral tyrosine kinase inhibitor for the treatment of ROS1-positive non-small cell lung cancer. This compound demonstrated very favorable efficacy and safety in a phase 2 trial, showed efficacy for brain metastasis where unmet needs are high, and received full approval in the United States. It has also already been approved in China and Japan in addition to the US, and we will now lead the submission for approval in Europe. The upfront payment is 50 million euros, with regulatory and commercial milestones totaling up to 145 million euros. The marketing authorization application in Europe is expected to be filed by the end of the first half of 2026. Serplulimab is an anti-PD-1 antibody already approved in over 40 markets, including China, Europe, Asia, and South America for the treatment of extensive-stage small cell lung cancer, or ESSCLC. It is the world's first anti-PD-1 antibody approved for small cell lung cancer. It is currently under development in Japan for ESSCLC and metastatic colorectal cancer, with development planned for perioperative gastric cancer. Henlius will continue to lead development for these 3 cancer types. The upfront payment is $75 million, with regulatory and commercialization milestones totaling up to $313 million. The first regulatory submission in Japan is planned for extensive stage small cell lung cancer within fiscal year 2026, followed by submissions for colorectal cancer and perioperative gastric cancer in or after fiscal year 2027. These compounds will maximize the oncology business platform we have built with Halaven and Lenvima, while also serving as a foundation to enter the new area of lung cancer. Strengthening our oncology pipeline is a top management priority, and we plan to continue making strategic investments proactively. While there is no change anticipated in our consolidated full-year forecast for the current fiscal year due to these two in-licensing deals, we expect their revenue contributions starting in fiscal 2028. This concludes my part. Next, COO Keisuke Naito will provide updates on our business and pipeline. Yes, good evening, everyone. From now on, Naito will update on our business and pipeline. As Mr. Oyama mentioned, our pharmaceutical business achieved strong growth through the third quarter. I will first explain the sales performance of our three main products, or so-called 3Ls, Lenvima, Dayvigo, and Leqembi, which supported this growth. Next, I will discuss our largest growth driver, Leqembi, covering initiatives aimed at maximizing its value, pathway optimization from diagnosis, treatment, and long-term follow-up, the global expansion of the subcutaneous formulation with auto-injector, positive changes in the environment surrounding blood-based biomarkers, and progress made in various countries. And finally, I will provide an update on our pipeline and key events going forward. First, Lenvima, the foundation of our business. Lenvima is an in-house developed orally administered anti-cancer drug approved for 7 indications across 5 cancer types. Its indication has been expanded with monotherapy or combination therapies with Keytruda and etc. Now, over 10 years since its launch, it has contributed to over 580,000 patients in 81 countries and territories. Its clinical value in indications, including its key indication, renal cell carcinoma, remains solid. Third quarter revenue was 258.1 billion yen, up 4% year-on-year. All regions showed year-over-year growth or maintained sales. By region, Americas continued to lead with 178.6 billion yen. In the U.S., while the Inflation Reduction Act, or IRA, impacted sales revenue, strong demand absorbed this impact, resulting in a 2% increase year-on-year. Retaining top market share in indications such as renal cell carcinoma and endometrial carcinoma, it continues to maintain strong cash generation ability as a core portfolio asset. We remain focused on achieving our full-year plan securely. Meanwhile, Lenvima was included in the selection of drugs for the third cycle Medicare drug price negotiation program published last month in the U.S. Negotiation with the U.S. authorities will start, and we anticipate the price revision based on these negotiations will take effect approximately 2 years later in January 2028. Furthermore, based on the favorable court decision and the settlement agreements regarding the high-purity patent, we believe generic versions of Lenvima will not be launched until July 1st, 2030, unless certain defined contingencies occur. Next is Dayvigo, an insomnia treatment. We have our in-house orexin drug discovery platform, which is involved in regulation of sleep and wakefulness. Dayvigo is an orexin receptor antagonist developed from this platform. Global revenue through the third quarter reached 47.7 billion yen, showing robust growth of 18% year-on-year. It has also received approval in as many as 27 countries and territories. By region, Japan recorded 35.2 billion yen, absorbing the impact of 14% drug price reduction and achieving 4% year-on-year growth. It holds a top market share of approximately 60% by sales in the insomnia treatment market, further solidifying its leading position. The Americas region recorded 7.1 billion yen, mainly driven by expansion in Canada. Other regions, including China, reached 5.3 billion yen, growing steadily as the number of countries where it is launched increases. With growth across all regions, we are increasingly confident in achieving full-year forecast of 58 billion yen. Next slide, please.
Next, turning to Leqembi. Leqembi is the only anti-beta antibody indicated for early Alzheimer's that can be administered over long term. Its key characteristic is that it removes both amyloid beta protofibrils and amyloid plaque, which have been reported to be potentially neurotoxic. Through this dual action, Leqembi is expected to prevent the decline in cognitive and daily functioning by slowing AD progression. Currently, it is approved in 53 countries and territories for the treatment of early AD. Additionally, regarding subcutaneous formulation, it is approved for maintenance treatment in the U.S. and progress is being made to expand globally. Leqembi global revenue in the first 3 quarters was 61.8 billion yen, more than doubling to 109% year-on-year. By region, the revenue was 31.2 billion in the Americas, 17.9 billion in Japan, 8.3 billion yen in China, 4.4 billion yen in EMEA, East Asia, and Global South, with all regions achieving steady growth. In the U.S., maintenance dose approval laid a solid foundation for high treatment continuation rate after 18 months. Furthermore, subcutaneous formulation with auto-injector or SCAI for maintenance treatment was launched last October. The revenue in the Americas is growing steadily at 71% year-on-year. In Japan, there was an impact from 15% drug price reduction in November last year, but continues to grow steadily and achieve revenue growth of 115%, more than doubling from the previous year. In China, access is widening, particularly in the private market, achieving approximately 3-fold increase in revenue, or 201% year-on-year. Leqembi is also included in the commercial insurance innovative drug list. Increased access in China starting from the second half of 2026 is expected. I would like to report to you that smooth progress is being made to achieve the full-year forecast of 76.5 billion yen in global revenue. This slide shows the overview of our initiatives for value maximization for Leqembi. One of the main characteristics of Leqembi is that early start of administration and long-term administration extend clinical benefits. Leveraging these characteristics to maximize the value of Leqembi, we believe it is crucial to optimize the entire pathway from diagnosis to treatment all the way up to long-term follow-up. The top part of the slide shows the current diagnosis and treatment pathway, and we aim to shift from here and establish a new, more efficient pathway as shown below. Specifically, clarified referral flow from PCPs to neurologists, enhanced mutual coordination between the two, prompt A-beta testing with wider penetration of BBM, administration at home enabled by the introduction of the SCAI, simplification of administration with SCAI introduction, and more options including at-home administration. Through all these measures, we will promote patient-centric treatment. With such transformation of pathway, we see greater potential to shift to new pathway. By reducing the time before introduction of Leqembi treatment and expanding the capacity of medical institutions, we aim to make AD pharmacological treatment established as a common option from early stage to realize patient-centered, highly convenient treatment. Subcutaneous injection with auto-injector SCAI is an administrative option that patients can choose in addition to IV infusion. This is an important driver that will improve patient convenience as well as expand capacity of care providers. In the U.S., IQLIK 360 mg for maintenance treatment, which can be used after 18 months of IV infusion treatment, was launched in October last year. Among anti-amyloid beta antibody, only Leqembi has this treatment option. This enables self-administration or administration by carer at home, reducing the burden of hospital visits while increasing the options of administration for patients. SCAI made by Terumo is designed to be easy and safe to use. Human factor tests confirmed that it can be used safely and effectively. The time it takes to administer with one SCAI is on average 15 seconds, making it very practical. Dr. David Watson, who had the largest number of patient entry in Clarity AD study, conducted the patient survey of those who participated in SC sub-study and supported our CTAP presentation last year. The results showed that subcutaneous administration achieved very high degree of satisfaction and convenience. Almost all patients chose subcutaneous formulation over IV infusion. There were many voices about feeling comfortable regarding self-administration and convenience in daily life, confirming that the treatment is less burdensome, less time-consuming, and easier to accept. As for SCI regulatory filing status, submission is already filed for iClick 500 mg that can be used in initial treatment. Priority review was granted. PDUFA date is set for May 24, 2026. We have also submitted filing for SCAI 500 mg in Japan and China. As issued in the news release today, priority review designation was granted in China. In the filing, one of the strengths of Eisai, which is modeling and simulation, was used to show PK/PD equivalence with IV infusion to achieve expeditious submission. As we announced, we will continue to work in collaboration with regulatory agencies and medical institutions in various countries as we continue this development. The confirmation of A-beta accumulation in the brain using blood-based biomarkers, or BBM, is a use of technology that can transform the front end of AD diagnosis and is a major driver that supports the expansion of demand for Leqembi. By using BBM in screening, it is known to increase the A-beta positive rate in PET CSF tests to follow. We also believe that wider use of BBM as a standalone A-beta confirmatory testing will streamline diagnosis process considerably. In the U.S., FDA clearance of IVD opens the way for clinical use. Development of guidelines, including from AA, Alzheimer's Association, and CMS application of national payment rate, are expected to lead to greater use of BBM as confirmatory testing. Not only for screening, this makes it possible to potentially substitute PET CSF, shortening diagnosis lead time. In Japan, China, and in Europe, we also see progress in regulatory reimbursement and operation activities. Based on the medical care system in each region, we are strengthening criteria clarification, initiation protocol standardization, and collaboration with clinical laboratory companies. With implementation of BBM, there will be progress in streamlining of A-beta diagnosis, opening further opportunities for Leqembi treatment and greater demand. Let me now give you an update on Leqembi in the U.S. In the U.S., key evidence concerning long-term administration and safety is more widely understood. Accordingly, more physicians are prescribing Leqembi, the indication of maintenance therapy that the only Leqembi has. As a result, around 80% of patients wish to continue treatment after 18 months, achieving high continuation rate. The new diagnosis approach with BBM and introduction of treatment option of iClick have begun to contribute to stable increase in demand. BBM diagnosis increased 17% on average in the last 3 months. We also have clinical data showing that 10% of total patients received A-beta confirmatory diagnosis using BBM. In January this year, national payment rate was applied by CMS, which we think will be another tailwind for higher penetration of BBM. iClick Medicare Part D formulary listing is expected in January 2027. Until then, it is possible to seek insurance reimbursement using medical exception process. which so far has approval rate of over 80% currently. The use of iClick from the start of Leqembi treatment, or iClick for initial treatment, was granted priority review status by FDA. PDUFA action date is set for May 24 this year. We are making ample preparations for the launch. If approved as scheduled, we expect the listing in the formulary to occur at the same time as that for maintenance treatment. These various initiatives are mutually creating positive spiral, resulting in steadfast growth of Leqembi in the U.S. In fiscal 2025, we are making good progress to achieve full-year plan of 40 billion yen, and we expect acceleration in pathway streamlining from the second half of fiscal 2026 with iClick initial treatment. In Japan, primary specialty care coordination that supports continuity of treatment is being established. Namely, good progress is made in enhancement of the referral network from primary care physicians, increasing the number of initial introduction facilities, and development of follow-up capacity. Consequently, from the visit to PCP, diagnosis and treatment initiation at initial introduction facilities up to the transitioning to follow-up facilities, the care coordination structure is steadily being established. Treatment continuation rate after 18 months is high at approximately 80%. We believe this is the result of broader understanding of the benefits of long-term administration of Leqembi by the healthcare professionals. To realize patient-centered treatment, we have completed SCAI submission in November last year, aiming for launch before the end of 2026. In Japan, drug price reduction of 15% took place last November, but this was absorbed, and we are making steady progress toward achieving full-year forecast of 24 billion yen. In China, in the first quarter, to respond to tariff risks, there was a temporary inventory adjustment, but on a real basis, demand kept increasing. Revenue in the first 3 quarters was 8.3 billion, showing good progress in achieving full-year forecast of 9.5 billion. In addition, last December, Leqembi was included in the Commercial Insurance Innovative Drug List, which is a new policy by the Chinese government to support development of innovative drugs and access. In the second half of fiscal 2026 and beyond, commercial insurance covering Leqembi treatment is scheduled to be introduced one after another. SCAI filing was also submitted in China, and priority review was granted, with launch expected in fiscal 2027. With respect to our pipeline, in-house discovered orexin-2 receptor agonist E2086 clinical development is well underway. In type 1 and type 2 narcolepsy patients, once-daily administration phase 2 trial will be starting before the end of Q4. As it was introduced in the slide on Dayvigo, Eisai has an in-house orexin pathway platform related to sleep and wakefulness. E2086 is an orexin-2 receptor agonist discovered based on this platform. E2086 single-dose proof of mechanism study in narcolepsy type 1 patients has already been completed. In this study, once-daily administration of E2086 significantly reduced excessive daytime sleepiness compared to placebo and a comparator. At the dose that demonstrated efficacy, E2086 was well tolerated and had favorable safety profile. This was confirmed. There was no observation of liver dysfunction and visual abnormality. Orexin agonist is a very competitive area, but Eisai expects that E2086 can be a best-in-class compound. That expectation was supported by the proof of mechanism study. Please stay tuned to hear the results from the phase 2 study in the future. These are the key events in the pipeline. I would like to start from neurology area. On the slide, ATN Continuum is shown. This means that Alzheimer's is understood as a continuum of various disease stages. At each stage, amyloid, tau, or neurodegeneration is targeted in drug discovery in a multifaceted approach to AD. As for Leqembi, 360 mg SCAI maintenance treatment is already approved in the U.S. 500 mg initial treatment is under review by regulatory authorities in Japan, the U.S., and China. AHEAD 345 study in preclinical AD patients who do not have symptoms is progressing smoothly, and top-line results are expected before the end of fiscal 2028, according to the schedule. Anti-MTBR tau antibody etalanetug is in phase 2 in sporadic AD or common form of AD, and in phase 2/3 in familial AD patients. We expect to obtain a number of important data beyond fiscal 2027. E2511, a small molecule aiming to regenerate neural function, is scheduled to start phase 1b in patients in 2028. E2086, orexin 2 receptor agonist phase 2 study is also expected to start before the end of Q4 this fiscal year. In oncology, we will be discussing with authorities of various countries regarding Lenvima in combination with HIF-2 alpha inhibitor in RCC to prepare for submission. As our CFO, Mr. Oyama, introduced, we expect to file submission in Europe for licensing taletrectinib in the first half of 2026. The second licensing product, serplulimab, filing is expected in Japan in fiscal 2026. E7386 CBP beta-catenin inhibitor phase 1b/2 results are also expected within fiscal 2026. This is the summary slide. Q3 performance remained solid, driven by organic business growth. We are progressing steadily toward achieving the business plan target, but in view of spending in Q4, full-year scale remains unchanged. 2 oncology assets were in-licensed to enhance oncology area pipeline, laying a solid foundation to maintain and expand oncology franchise. The growth of 3L is contributing to steady enhancement of corporate value. Pharmaceutical business as a whole achieved revenue growth. Leqembi steadily expanded across all regions. Through BBM and SCAI and other efforts, we have a ready environment for further growth. Pipeline is advancing on multiple fronts and is being expanded through both in-licensing and in-house R&D to achieve sustainable corporate value enhancement. With that, I would like to conclude the report on the Q3 business and pipeline. Thank you very much for your kind patience.
Now we would like to move on to the Q&A session. We would like to receive questions from analysts or investors, and then we would like to open the floor for those participating from the media. If you wish to ask a question, please mention your name and affiliation before asking your questions. Now, from analysts or investors, if you have any questions, please raise your hand. From Citigroup Securities, Mr. Yamaguchi. Mr. Yamaguchi of Citigroup Securities, please unmute yourself. Yes, thank you very much. Can you hear me? Yes, we can. This is Yamaguchi of Citigroup Securities. I have 2 questions. First one is, as CFO Oyama explained, the performance up until the third quarter this fiscal year, it seems to be quite strong. But at the time of the earnings call for Q2, there was Q&A about this, and 35.5 billion yen, which was incorporated in the business development profit. How would you take that on that? Do you think that there will be a further upside? If you include that, then there will be upside, and without that, I think that you are able to achieve the company's guidance. Could you please explain on that point? Mr. Oyama is going to respond to your question. Yes, in other income and expenses, we had a forecast of the one-time temporary profit, which was related to its partner. So for this fiscal year, it is still uncertain. through to the third quarter, there hasn't been much of such, but there is a potential that there will be such a profit incurred in the fourth quarter. Regarding this, we would like to say that considering the fact that organic business is steadily growing, but without such temporary profit, we are working toward achieving our forecasts. But for the fourth quarter, we have some points to mention. As we said at the time of the earnings calls in the second quarter, we are conducting the structural reform for EMEA, and therefore costs will be incurred in the fourth quarter. And on top of that, R&D expenses, which will be allocated to the development and research of the key pipeline assets. So based upon these assumptions, organic business will be absorbing those negative impacts from those factors. Thank you very much. One point to supplement. As you mentioned, regarding the costs to be incurred in EMEA and R&D expenses, do you think the costs will be exceeding the current guidance of the company? But do you think that in Q4, do you think that the revenue or profit will offset such negative impacts of the structural reform of other R&D expenses cost in the fourth quarter? Mr. Oyama is going to respond. And we have seen the strong performance until the third quarter, and because of the impact of the structural reform, there has been the optimization of the R&D activities. Therefore, if you just look at the R&D expense line, there would be a potential downside. However, regarding the structural reforms for EMEA, we believe that these costs will be contained within the current expectation because we have already factored in the significant amount for the structural cost in EMEA. Therefore, you can stay with the estimate of 54.5 billion yen. Thank you very much. My second question is about Leqembi. Well, the growth has been on track and performance has been within your expectation. That is good. And the first one is related to the initiation of maintenance treatment utilizing SC. And then the patients who are going to switch to SC, what percentage of patients who are switching to SC-AI? But I think that the Kisuna is catching up with Leqembi in terms of revenues. So do you think there has been any impact by such competitors' drug in the field? Thank you. For your first question about the SC maintenance treatment, SC maintenance and what percentage of patients are switching to SC for maintenance treatment, Mr. Haruna is going to respond. Thank you very much for your question. My name is Haruna. I am responsible for Leqembi in the United States. First, iClick for maintenance treatment. What percentage of patients are using this? Currently, it is only just has been launched, and a short time has passed since the launch. Therefore, we do not have any numbers to be disclosed now. But after 18 months administration, and then about 80 or over 80% of patients who have completed 18 months treatment wish to switch to the maintenance treatment. Therefore, there has been quite a high number of patients who want to continue on the treatment. And iClick maintenance treatment impact on the revenue or plan of the sales. It is performing well, exceeding the original plan. And week by week, the number of patients as well as the sales are increasing. Therefore, they are continuing to expand. Regarding the insurance coverage procedures, medical exception process procedures are not constituting a bottleneck. Therefore, actually, over 80% of patients are getting the approval for their reimbursement. Their overall performance has been quite strong, and we are making steady progress. Thank you very much. Regarding the second question about the competitors' situation, Mr. Naito is going to respond first. And regarding the U.S. situation, Mr. Haruna, and for Japan, Mr. Yusa is going to respond. Thank you very much for your question. Considering this market, first of all, we have to think about the fact that Alzheimer's disease is a progressive and a fatal disease. I think that is very important to consider. From that perspective, Leqembi is demonstrating the effect of the early initiation of treatment and also benefits for the patients as well as for their lifestyles. These benefits can be considered overall, and that is the characteristics of Leqembi. When we consider this area, not simply removing the amyloid beta, but also long-term control of amyloid beta is considered to be very important. Therefore, the long-term administration can bring about a benefit by this drug. So the early initiation of a treatment as well as the long-term administration are the characteristics of this drug. And in Japan and US and China, SCAI is being developed, and we have completed submissions in FY 2026. This will be approved in major markets, and from the initial treatment, it is possible for patients to start using the SCAI. So these are the characteristics, as I mentioned earlier, considering the lifestyles of the patients, and there will be increased options available for patients. That means that in terms of convenience, this is going to be a significant benefit. Considering all of this, Leqembi as a treatment for AD is expected to become a gold standard. We are confident in this. Furthermore, in DMT market, over the past 12 months, that has been doubled, and the number of new patients as well as the number of prescriptions of Leqembi have also increased as such. Considering these, in each region, I would like to ask Haruna-san and Yusa-san to report to you. First, Mr. Haruna, could you please take the floor? Thank you very much. This is Haruna. I would like to respond to your question about the status in the United States. As you pointed out, a competitor's drug, Kisunla, in terms of sales share, in the third quarter, it was 50-50, evenly split. On the other hand, in the value terms, Leqembi and Kisunla compared, the wholesale acquisition costs are different. And for Leqembi, the patients are switching to maintenance treatment with half the dose, so that may have been impacting. In order for us to understand the situation of the competitor drugs, we are utilizing different sources, including internal source, and we are looking at the share, and Leqembi is expected to have about 65-70% of the share in terms of the number of patients. Therefore, the new prescriptions are increasing and the market itself is expanding. Therefore, Leqembi is expected to grow steadily. Continuously, we needed to differentiate us from other companies' drugs, particularly removal of amyloid and also long-term control of amyloid are not exactly the same. This is for major chronic neurology disease. Once biomarker turns negative, the treatment is discontinued, but it's not the way for the treatment of the chronic neurology disease. And the value of the long-term administration of Leqembi and differentiating the clinical profile and also expanding the number of options available for administration, these are considered to be the differentiating features. And Leqembi has the clinical data over 4 years, and this is the only drug of this, and also focusing on the disease control in a continuous manner. These are the value proposition we would like to focus on. During the third quarter at the CTAD, a new presentation was made on the data to enhance the brand power, particularly Leqembi's maintenance treatment and also discontinuation treatment by Novonesimab. A comparison was made in the presentation, and we believe that we have been able to demonstrate the significance of continuous treatment with Leqembi. As such, the continuous treatment is only available with this drug alone, and therefore we have the 4-year data which shows the strengths of this treatment. And IQLIK in 2026, IQLIK initiation therapy will be added, and there will be increased best-in-class convenience, and also the benefits will further differentiate us from other companies' drugs. And Leqembi is expected to continue to grow steadily from next fiscal year onward. So this is all about US. So I'm sorry, I have made a lot of time, so you can skip your response to question about Japan.
Next, Mr. Wakao from JP Morgan, please. please unmute and please give us your question. Thank you. This is Wakao from JP Morgan. Thank you for taking my question. First is about Leqembi initial treatment. After the approval, how will it change the penetration in the market? The other day, according to Biogen's briefing session, they expect linear growth, not approval, but in January 2027, after coverage, they expect the growth in sales. Medical exception process that was explained by Eisai before, using that medical exception process, and if approval is obtained after May 24, sales immediately is likely to start according to Eisai's explanation, and it seems that there are differences. Could you address this? Mr. Haruna will respond. Thank you for that question. Medical exception process, I've mentioned medical exception process earlier. Currently, in more than 80% of the cases, insurance is reimbursed. In January 2027, after listing in the formulary, a smoother reimbursement is expected. That is for certain. But at the moment, insurance reimbursement is not posing as a barrier. That is also confirmed. Initial treatment, once it is approved, we believe that with IQLIK, there will be acceleration of growth. Even before waiting for January 2027, we expect the pickup in pace of sales expansion. Then, and of course, it depends on how to interpret Biogen's comments, but would it be correct to understand that Biogen's explanation was rather conservative? Whether conservative or not, I would rather not comment, but in January 2027, we expect even further expansion. That I would say, and so we can consider that there is a two-stage growth in IQLIK. Thank you. And based on that explanation, and recently, organic growth is very strong. Next fiscal year, ROE of 8% was the target, but it appears that at high probability this can be achieved. So next fiscal year, ROE of 8%, what do you think is the prospect of achieving this? What is the current view? Mr. Oyama will respond. Regarding the next fiscal year, fiscal 2026, we are currently developing the business plan, but Leqembi business will be supported by subcutaneous formulation. We expect approval in Japan and the U.S., and excluding R&D expense, we expect to turn profitable, and organic business profitability improvement is also expected. As a result, in the medium to long term, more than 10% of operating margin and ROE, capital efficiency of 8%, and further improvement, that direction remains unchanged. As for medium to long-term growth of this company, we have discussed 2 in-licensed products, but enhancement of pipeline is considered the utmost priority, so the direction remains unchanged. But with a short-term capital efficiency, we don't want that to be a constraint in strategic investment, and that is how we plan to manage our business. Organic business is steadily growing, and we are also implementing strategic investments. With that in mind, we hope that you will wait for future disclosure of results for next fiscal year. So not in fiscal 2026, but in fiscal 27 or beyond, you believe that it is more likely to achieve ROE of 8%, meaning you don't believe you can achieve 8% ROE in fiscal 2026? Sorry for this complex question. The target and direction that we are aiming at remains unchanged, but business plan is currently being developed. Please understand that we are currently developing the business plan. Thank you.
From Macquarie Securities, Mr. Tony Ren, please. Please unmute yourself. Mr. Ren, please.
Hi there. Can you hear me?
Yes, I can hear you.
Okay, perfect. So I have a couple of questions on Leqembi. The German government agency IQWIG, they concluded that Leqembi offers no additional benefit over basically Aricept, based on previously undisclosed information that you provided to the agency. Could you explain to us what data did you provide IQWIG? How does this opinion affect Leqembi's prospect in Germany in particular, and Europe in general? So that's my first question. The second one is also on Leqembi in the China's commercial insurance innovative drugs list. It has been in the list for about 5 weeks now. Wanted to see what kind of impact have you seen on the ground in China. Thank you very much.
For your first question, Mr. Ike is going to respond. Yes, thank you very much for your question. In Germany, the negotiations are going to be starting from now on. The clinical benefits and data were submitted to reach their conclusion, as you mentioned. But going forward, there will be additional data, information will be submitted, and we will continue to have negotiation with the authorities. So please wait until we see the conclusion. And regarding your second question about China, Sasaki-san is going to respond. Yes, thank you very much. My name is Sasaki. I am responsible for China business. Let me respond. For advanced innovativeness and also the benefits value, and for the new the commercial insurance innovative drug list that has been established in China, and Leqembi has been included in this list. And going forward, together with the insurers, we are going to have negotiations. And in the second half of fiscal year 2026 onward, there will be an expanded coverage of the treatment by Leqembi under this commercial health insurance, and we aim at expansion further. By this expansion of the commercial coverage, and there will be a reduction of the burden of the patients, and also treatment continuation rate is expected to improve as well, on top of the increase in the number of new patients. By having this list, including Leqembi, we expect that there will be further acceleration of adoption by hospitals, and we are starting to see such expansion gradually now. So that was my response to your question.
Next, we have Mr. Muraoka from Morgan Stanley. Please unmute and please give us your question. Thank you very much. This is Muraoka from Morgan Stanley speaking. RE of 8% was the earlier question, and I have a related question. Next fiscal year, how much substantial improvement in financial performance can we expect? What level can we expect from May guidance? It's rather ambiguous. We can see that you have strong determination, but when it comes to actual numbers, it is not as clear. So could you elaborate on this further? What expectations can we have for next fiscal year as we wait your announcement in May? Mr. Ike will address that question. Until about a month or 2 months ago, I was responsible for this area. Therefore, allow me to answer your question. Organic business growth in comparison to last year was very strong this year, as Mr. Oyama just reported earlier. On the other hand, in fiscal 2025, there can be business commercial investment still is being made, and it is still in the loss-making situation. But in fiscal 2026, we intend to turn profitable. Therefore, organic business next fiscal year, in fiscal 2026, is expected to continue strong growth. Furthermore, one-time items in non-organic area, how much can we achieve? It depends on that as well. I believe what is likely to be your consensus view for Eisai's fiscal 26 operating profit. In comparison to that consensus, we would like to aim at a higher level. Thank you. For our information, you've mentioned that because you have to also acquire new assets, cost is expected to be incurred according to Mr. Oyama, but it is not included in core profits. I don't think costs will be incurred based on IFRS. I was not able to understand fully. Mr. Oyama will respond. As you rightly mentioned, acquisition cost is going to be capitalized as asset, but because of acquired assets, R&D expenses may occur. As larger the size of such deals, potential for increased R&D cost is higher. So we should not put restraint on such a potential deal. That was what I meant to say. Basically, the initial upfront payment will be capitalized as asset. That is correct. Your understanding is correct. Thank you very much. That is all.
From UBS Securities, Seki-san, please. Mr. Seki of UBS Securities, please unmute yourself. This is Seki speaking of UBS Securities. Thank you very much for your presentation. Slide deck was very easy to understand and clearly described. Thank you very much. And my question is about the in-licensed assets in oncology. What about the U.S. oncology? And I think it is going to be costly. I don't think that you have a leeway available on your current balance sheet. Mr. Ike is going to answer your question. Mr. Seki, thank you very much for your question. So far, 2 deals were made. One is mainly in Europe and Canada. Another is in Japan. And what about Americas? Lenvima will continue to be valid until 2030. And in the United States, we have been also considering these deals as well. Regarding your question whether we have such a allowance or leeway on assets, yes, we would like to say we have. And we have had a disciplined policy in the financial structure. But together with CFO Mr. Oyama, we'd like to make a shift a little bit towards these growth investments. And we believe that we have available assets on that. And thank you very much. And I have a second question regarding Orexin. I may have heard a statement that there is potential licensing out, but so far, have you considered this, or are you going to continue developing this project on your own? Mr. Ido is going to respond to your question. I am in charge of R&D. As you have pointed out, as you said, E2086, in principle, we are developing this product on our own, and we are about to start a phase 2 study. Thank you very much. That's all I have.
Next, Ms. Sogi from Bernstein. Ms. Sogi, please unmute and please give us your question. Thank you. About oncology, about the licensed in products. This is related to Mr. Seki's earlier question. In order to maintain oncology business, inorganic deals will be pursued proactively. Does that mean that you will be actively pursuing inorganic deals? As for licensing products, how will R&D expenses be shared? That was not touched upon. If you could provide information. Mr. Naito will respond. About the direction of oncology, as Ms. Sogi, you've rightly mentioned, that is the policy. CBP beta-catenin E732886 was also mentioned. We will also develop our in-house oncology assets in our pipeline, but currently we need to enrich our pipeline with in-licensed products, which is a important priority issue. That is our recognition. Going forward, how to split the expenses? I would like to ask Mr. Oyama to respond. The second question will be addressed by Mr. Iike. Thank you for your question, Ms. Sogi. First, about the first question, turn to left in it for Europe. This is soon to be filed for submission. So research and development cost will not be incurred so much. It will be sales and marketing expenses. As for anti-PD-1 antibody for Japan, serplulimab, we cannot give you the details of the agreement, but our research development cost burden is considered to be small. Thank you. I have a question regarding Leqembi in China. Innovative commercial insurance, innovative product listing was achieved. I understand that this is a private insurance. And NRDL this year, you may not have said that this year, but regarding NRDL, I understand that you will be preparing to file so that Leqembi will be included in the list. Are these two lists taking place in parallel, or are they separate? Ms. Sasaki will respond. Thank you for your question. This is Sasaki speaking. NRDL, this is a national reimbursement drug list reimbursed with national fiscal resources. But rather than being listed here, Leqembi is listed on commercial insurance innovative drug list, which is an innovative list of innovative product for high clinical benefit. And because of the intention of Chinese government to increase private insurance coverage for such innovative product, this list is published by Chinese government. So commercial insurance listed a product. Will it be listed in NRDL at the same time? That is not the case. Thank you.
From Goldman Sachs, Ueda-san, please. Goldman Sachs, Ueda-san, please. Please unmute yourself. This is Ueda of Goldman Sachs speaking. My first question is about Lenvima. In Americas, during the third quarter under review, the performance was strong. Going forward, IRA, the access is improved. And do you think there has been such a contribution, or are there any temporary factors which are making the performance of Lenvima strong? Mr. Haruna is going to respond. Thank you very much for your question. I am responsible for Lenvima in the Americas. My name is Haruna. First, Lenvima in the United States, Americas, is performing quite strongly because of the redesign of IRA. Access is being improved, not only with that, but for RCC and the thyroid cancer. Since launch 10 years ago, regarding these existing indications, we are seeing increased shares for RCC. So far, clear cell data was available, but non-clear cell data is also being expanded, and NCC and also the package insert for both indications. There has been a strong recommendation under the guideline for this particular drug. Therefore, with these, Lenvima is growing for RCC, which I believe will continue next year as well, next fiscal year as well. Over the past fiscal years, utilizing AI for omni-channel approach is being expanded for all indications, particularly in the 10th year DTC has contributed to the expansion of sales. For all indications, we expect to see growth. For fiscal year 2026, this trend will continue. IRA redesign has been impacting, but exceeding that, I believe that Lenvima will continue to grow. And also the submission for the LITESPARK 11 will be conducted. Therefore, we believe that there will be further growth with LENVIMA. Thank you very much. Second question is related to the strategic investment. Over the past several years, Eisai has been licensing out to receive short-term one-time income in order to generate short-term revenue as well. But recently, there has been several deals, as has been explained in the presentation. You said that you would like to be proactive in making such strategic investment going forward. Could you please give us your background for why you think in that way? Currently, LENVIMA will be valid until 2030, or LEQEMBI is ramping up, or R&D expenses peaking out with LEQEMBI. So with these in mind, could you please give us your guidance or how you focus into the future? Mr. Ike is going to respond. Thank you very much. As Ueda-san mentioned, exactly what you have mentioned is what we assume. LENVIMA in the United States, last year, our high purity patent was granted and protected. And above all, the profits from LEQEMBI business are turning into the black ink. As we have been telling you, 370 billion yen level of proactive investment has been made into this program for about 5 years in the past, and that has supported our profits and by being supported by one-time items. But from now on, we believe that we have switched the gear towards the return generation period. So that's why we have turned a policy to more focusing on the proactive investment for the growth. Thank you very much.
Next, Yoshida-san from Tokyo Tokai, please. Excuse me. Mr. Hashiguchi from Daiwa Securities, please. This is Hashiguchi from Daiwa Securities. Thank you very much. ROE of 8% was discussed several times. I would like to clarify the way of thinking. At information meeting in last year, according to what I understood, the one time exists in fiscal 26, but there will be no one time in fiscal 27, and yet ROE of 8% will be the target. You have added various provisos today, but excluding those provisos, basic policy remains unchanged. Is that correct? Mr. Ike will address that question. Mr. Hashiguchi, thank you for your question. The basic policy remains unchanged, and what you've described, Mr. Hashiguchi, is also correct. In fiscal 2026, including one time, ROE of 8% will be the target, and in fiscal 27, excluding one-time factors in organic basis, we aim at a 10% level of ROE. That was what Mr. Keisuke Naito announced in March last year in information meeting. That remains unchanged. But regarding these one-time items, including sales of assets, is that going to be utilized, or rather, are we going to make growth investments and continue to hold on to assets? That is what we are trying to determine right now, and we hope you understand. Thank you. Thank you very much. I myself thought that including one time in fiscal 26 to achieve 8% ROE rather than persisting on this, I believe that in 26 efforts should be focused to ensure medium to long-term growth. Inclusive of that, regarding medium to long-term strategy, we hope that there will be an information meeting to discuss such a strategy. Do you plan to have such a meeting in March this year again, or is it going to take more time before you put together such strategy? Mr. Hashiguchi, thank you very much. Regarding information meeting, every year we held an information meeting in March, but We plan to hold information meeting at the end of May this year, so details will be announced later. The background of that and my question regarding medium to long-term strategy, I hope that in a comprehensive way, there will be a presentation. Does that mean that internal discussions still are required before presentation can be provided for medium to long-term strategy? That will be addressed by Mr. Naito. Internal discussions, we are trying to thoroughly complete internal discussion. Before discussing these, before the annual earnings results, we felt that it would be better and more realistic to discuss those after we have annual results as well. Thank you.
Now we would like to receive questions from the media. If you have any questions, please raise your hand. Yokoyama-san. Mr. Yokoyama. From Nikkei BP. Mr. Yokoyama, please unmute yourself. Can you hear me? Yes. Two in-licensed deals were recorded this for lung cancer and GI cancer. In these areas, you have never attacked these areas of therapies. So in these new therapeutic areas, how do you plan to develop your market? Could you please share with us your strategy? Mr. Ike is going to respond. Thank you very much for your question. First, as you see on the left-hand side, this is about the lung cancer indication for this product. For NSCLC, not all the NSCLC, but this is indicated for the patients with a mutation on specific genes, accounting for about 2% of the entire NSCLC. Therefore, prescribers, physicians, and hospitals which can provide such treatment are limited. Therefore, field people, reps of Eisai who are available in Europe can cover such accounts. In some cases, lecanemab is dealt with. Field personnel can also deal with these accounts. So in terms of the efficiency, we believe we can maintain high efficiency. So here you see ROS1 positive, the lung cancer. This drug has been demonstrated to be very efficacious in clinical trials. On the right-hand side, you see in Japan, PD-L1 antibody like Opdivo or Keytruda. However, indications are aimed at those diseases which are not captured by other competitors. So that is the policy of the partner. So the binding mode of PD-1 is also different from others, and it is a quite a potent PD-1 antibody. For GI tract cancers, which is more common in Asia, including Japan. So what we are aiming at getting approval first is not a non-small cell, but a small cell lung cancer. So compared to the non-small cell lung cancer, we do not have a large number of patients. However, there is still a very high unmet needs. And Opdivo and Keytruda is not indicated for this disease. Therefore, we'll be able to cover this market as well. And also, together, Lenvima, we are working with Merck. And I believe that there will be no cannibalization potential with that. So we have high expectation. Regarding the extensive stage NSCLC, this is going to be the first for the PD-L1 antibody. And with the two companies, OS hazard was about 0.7. And serplulimab, it has a little better than that. But comparing head-to-head, I think that the probability of having advantage over competitors' drugs is still slim. So I thought that you have a clear strategy to compete against those, but you don't have one. For the first indication, and that has been already approved in 40 markets. Therefore, we believe that the probability is high. And this is different from PD-L1 antibody. This is because this is PD-1 antibody. Therefore, we believe that we can be competitive enough. And colorectal cancer as the next target indication, particularly MSI high, is indicated with Keytruda. However, non-MSI high, this is going to be the first indication to be granted to any drugs. Therefore, we can have a differentiating factor with this highly expected new drug. In colorectal cancer, Atizo and Ikia combination was demonstrated to be efficacious in asthma last year. But do you think that this drug can be used and efficacious with monotherapy? Yes, that is correct. Thank you.
Since time has come, we would like to conclude today's briefing session. Thank you very much for your kind attendance.